Good day, ladies and gentlemen. Today I'm going to be unleashing a powerful and profitable strategy that you can use to trade Nasdaq. Okay, Nasdaq goes by different names depending on your broker. All right, so on some brokers you're going to see Nasdaq as NAS 100. On some brokers you see it as US Tech. As you can see, mine is US Tech. Okay, so mine is US Tech. Look at it up here. Mine is US Tech. So you need three things in order to be able to execute this strategy. The first one is you need to go on your 15 minutes time frame. All right, you can play around with other time frames, but personally I use the 15 minutes time frame. So once I finish explaining and you understand the strategy, you can go and see how it plays out in other time frame. But personally I'm telling you what I use to trade this strategy, 15 minutes time frame. The second thing is for you to know this particular price action pattern known as a channel. There are three types of channels. You have ascending channel, descending channel, and horizontal channel. So let me quickly show you how it looks. So for ascending channel, you're going to have something like this. Let me copy that. You're going to have something like this. So this will now form like a boundary, while price is going to be playing inside of this. Price is going to be playing inside of it like this. Okay, so this is an ascending channel. All right, and for a descending channel you have something like this. Quickly, descending channel is basically the same thing, just that this one will be pointing downwards. You have something like this. So this is a descending channel, while an horizontal channel is going to be like this. Let me copy this. Copy. Okay, so horizontal channel is just going to be like a rectangle pattern like this. Copy. Okay, something like this. So if you're good with technical analysis, you know how to play around with these shapes very fast like I just did. Okay, so this is an ascending channel right here, ascending channel, descending channel, horizontal channel. So these are the three channels that we have, and you need to know how to draw them. Okay, because the strategy is based on this particular pattern, but it's not going to be perfect. You don't expect it to be perfect. It's forex trading. It won't always come out perfectly. Sometimes when you're drawing your descending or ascending channel, it's going to look like a wedge. Okay, let me show you how wedge looks. For wedge, one end is a little bit tighter compared to the other end. So this is how a wedge is going to look like this. One end will be tighter compared to the other end, while the other end will be wider. Okay, but channel is more like you have equal space. Okay, the space you have at this end is the same space you have at this end is the same space you have at this end. But for wedge, the space you have at this end is smaller compared to the space at this end. So you have to know that's the second thing. Let me delete all of these. So the third thing you now need to know is location, which will make everything easier for you. Location. Where are you going to find this particular pattern? Where will you be looking out to draw this pattern? The pattern forms after an aggressive move. So that saves you time. You are not going to be looking all about the charts, staring at the chart from morning to night. No. You are looking for an aggressive move. After the aggressive move, that's when you should start checking out to see if the pattern is going to form. So you know where the pattern is going to be located. It's going to be located after an aggressive move. Okay, so once you have these three things lined up, then you are good to go to apply this strategy. Okay, I'm already on the 15 minutes time frame, so let me explain the actual strategy. As you can see, I'm going to analyze the whole of April. Today is 18th of April. I'll analyze the whole of April. So this is 1st of April already. As you can see, this is 1st of April right here. Okay, 1st of April. So we have an aggressive move upwards in the upward direction like this. This is an aggressive move in the upward direction. So I have to start looking to do what? To actually draw my pattern. So let's see if the pattern is going to form. I can already see the pattern. So I need my trend line in order to draw my channel pattern. So this looks like a descending channel. Okay, let me copy. Alright, so I have this. Let me move it a bit. You can see what I'm doing. So this is the boundary that I have, and you can see it doesn't look like a perfect channel, it looks like a wedge in a way. So what I'm looking for is I'm waiting for my channel to get broken. Okay, I'm waiting for it to get broken. This pattern I've drawn, I'm waiting for it to get broken. Once it breaks and closes outside of it, I'm waiting for a pullback. Then I'll place my my sell stop below the pullback. You can see I have a pullback right here. I have a pullback, that blue candle, that small blue candle that pulled back after the red candle closed below the pattern. Let me zoom in so you can see. I need my horizontal line to use as my entry. Okay, good. So look at this. This closed below my pattern, right? Then you add this pullback. Under this pullback is where I'll place my sell stop. Why am I doing that? This could be a fake out. Okay, so to avoid having issues of fake outs, you place your sell stop or buy stop beyond the pullback. So when price comes back there to trigger it, you are then tagged into the trade. Where will your stop loss be? Your SL will be above the pullback, a few pips above the pullback. SL, a few pips above the pullback. What is your target? Your target is 1 to 2 risk to reward ratio. Whatever you are risking, target 2 times of it as your take profits. And as you can see, price moved down from there to give us 1 to 2 risk to reward ratio. Okay, hope you understand it. You are waiting for the pattern to get broken. Once it gets broken, you wait for a pullback. As the pullback is forming, you place your entry. It has to be a pending order, a sell stop or a buy stop, just below the pullback. Okay, where it's reversed from, where the pullback reversed from, you place your stop, your entry there. Okay, so price gonna come back to trigger it. And the beauty of that is, in case it's a fake out, as it is pulling back, it won't come back to tag you in. It will just keep moving in that direction. So you are saved from the issue of fake outs. Okay, so for it to come back after pulling back to trigger the trade, it implies it's actually want to move in that direction, and your 1 to 2 is certain. Okay, so that's the first trade that we would have taken. Let me delete this so it doesn't confuse you. And again, you had a big move down. You see that big move downwards? From there, we are looking to do what? To draw our pattern again. And as you can see, the pattern has formed. Hope you can see the pattern. I've already drawn it out. So the channel is already drawn. I'm waiting for it to get broken in order for me to enter. It got broken here, right here. Can you see that? Pattern got broken at that point. I'm waiting for my pullback. I can see a blue candle right there. What do? I'll just move my sell stop just below that blue candle, waiting for price to do what? Waiting for price to come back there in order for me to enter, to be tagged in. Where will I place my stop loss? A few pips above that pullback. Okay, I'll place my stop loss somewhere around here, a few pips above that pullback. Target what? 1 to 2 risk to reward ratio, and this gave us more than 1 to 3. Okay, gave us more than 1 to 3. So if you are good with using trailing stop, you can trail your stop probably manually in order to catch more of the move. Okay, so that's the second example. Let's see. In the same vein, this is a big move. So this pattern usually forms after a big move. US Tech is used to doing this. So you have this. What do we have? Let me zoom out a bit. Okay, so we have our pattern formed. Another thing is skill. You need to be skillful at drawing this pattern. Okay, you already know where it will be located after a big move. That's where it's going to be located. Now, what will now differentiate who is going to make profits from this and who will not is skill, and that's what differentiates experienced traders from beginner traders. You need to be skillful enough to draw these patterns correctly. So you have this. Next, what do? I'll wait for the pattern to get broken, which it did right here. Pattern got broken right here. We had our first pullback there, that blue candle. I'll place my my sell stop just below the blue candle. Let me zoom in. Okay, my sell stop is going to be here. Where will my stop loss be? Just above that candle that pulled back, somewhere around here, SL. So this blue candle is the one that pulled back, gave me my first pullback. Okay, so I would have been triggered, my trade would have been triggered here. All right, and guess what price did? Price danced around a bit. Okay, price danced around a bit, putting me in drawdown. Danced around a bit, putting me in drawdown, but it did not get to here, to my SL, which is just above this candle. Okay, after bouncing around for some time, it did what? Moved in the downwards direction, giving me 1 to 2 risk to reward ratio, as sweet as that. Okay, so you have another big move right here. We had a big move right here. See that? So I'm looking for the pattern to form, and I have my pattern. All right, so I've drawn out the, what's it called now, the ascending channel. And what happened? Wait for it to get broken. It got broken, but this time around did not give us an opportunity to enter. So this is a trade that we would have just watched. We watch it as it's, you know, it would have paid us, but we are not going to be part of it, because our system and strategy is to wait for a pullback, because we don't want fake outs. Okay, so that's the downside of waiting for that pullback. But it's better. It's now a question of, do you want to miss out or you want to miss money? So we think about that. So in this case, we are going to miss out, but we did not lose any of our money. Our money is still intact. So this is a nice trade, but we wouldn't have taken it, because you need to follow your strategy. And in the same vein, this is a big move, right? Big move. I'm looking for my pattern. So I had the pattern right here. You can see price was giving us a movement within the range, so I marked it out. It broke out here. Let me zoom in so you can see clearly. Okay, it broke out right here. I'm not entering the trade even though it has broken out. Why? I need my pullback. I saw the red candle that pulled back. Good. So at this level, just above the pullback, I'm gonna place my buy stop, meaning I want price to come there and tag me into the trade. So where will my stop loss be? Just below a few pips, maybe a few pips, you know, below this red candle that stood as the pullback. This is where my SL would be. So what do? I'm targeting 1 to 2 risk to reward ratio. Whatever I'm risking here, 2 times 2 of it, I need it in my account, and that's exactly what it gave me. In fact, it gave me about 1 to 3 risk to reward ratio. Okay, so this is a very powerful strategy. Please, if you are getting value, please subscribe. That's the only way you can encourage me to keep giving you these secrets for free. Okay, this is a big move. Why did I not draw anything here? This is a big move right here. So this is looking like an horizontal channel. Let me double this horizontal line. Okay, it's looking like an horizontal channel right there. So what happened? Let me zoom out. Let's see. Okay, let me move this up, because it's up to this point. So that's this thing, what was it called? That's the horizontal channel, but it didn't really break in any direction. Okay, it broke below. It broke below right here. So I would have done what? Waited for a pullback. This blue candle is the candle that pulled back. Okay, so my sell stop will be right here within, and I want the sell stop to get triggered in order for me to move downwards. But guess what? It didn't come back to trigger my sell stop. Instead, this is a fake out. This very silly candle that came out was a fake out. So the pullback turned out to be a reversal. It kept moving upwards, you know. So I'm not going to lose money. That's one thing I like about waiting for a pullback. You're not going to lose money. Okay, we are not you know, we are not greedy. Don't try to enter all the trades. You can see what happened there. This was a fake out. So assuming we don't want to miss out at all, we want to always get all the trades, we will enter after that breakout. But the breakout turned out to be a fake out. Anyway, this is also a big move that I'm seeing right here. Okay, so I'm looking out to see my pattern, and my pattern formed right here beautifully and wonderfully. Okay, so my pattern got broken with this big blue candle. Let me zoom in a bit. Here's my first pullback, this red candle right here. So what am I to do? Let me delete one of the black horizontal lines so I can use this one as my entry. So this one, I'll place my buy stop right here. Where will my stop loss be? My stop loss will be just below this candle that pulled back. What am I going to target? 1 to 2 risk to reward ratio. And what happened? Price moved sideways, then it moved up to these points. So I would have gotten my 1 to 2 risk to reward ratio. Look at where price got to. Okay, I would have gotten my 1 to 2 risk to reward ratio. So this is also a big move. This is a big move right here, all of this. So I have an horizontal channel formed right here. Okay, it's an horizontal channel formed right here. But I didn't get an opportunity to enter. Why? Price just broke out and moved aggressively with one big ugly looking candle. So I would have missed out on this. I would have missed out on that. But that's a big move. Let's see if anything is going to form. I didn't draw anything here, but I can see this is like a pattern right here. This is like an horizontal pattern. Price did not go outside of this range, so this range can be my pattern after the big move. So what happened? Price broke out at the top. Okay, so price broke out at the top right here and then gave me a pullback. What am I going to do? Let me use this one under this line under to mark where I'm going to enter. I would have entered somewhere here. Okay, I would have entered somewhere here. So price pulled back, then as it's returning, it would have triggered my trade for me. That's where I place my buy stop. Where will my stop loss be? My stop loss will be just around here, around this part. That's where my stop loss would be. SL. Taking 1 to 2 risk to reward ratio definitely gave me more than that. Okay, can you see that? All right, so basically that's how it goes. That's how it goes. I have another one here. This is a big move. I don't want this video to be too long, so I think I'm going to end very soon. Let me be fast with my analysis. So this is a big move. Definitely you can see that horizontal consolidation at the top there. A channel can be formed around that side, and that's what I just did. I just drew a channel there. Let me zoom in a bit. Okay, so I have this. Now you can see the breakout here, and I can see a pullback with a blue candle. You can see that pullback with this blue candle right here. Pullback with this blue candle. What will I do? Let me move this as my entry. So this one is the one I'll use as my entry. I'll place it just below that blue candle. Place my sell stop there. Where will my stop loss be? My stop loss is going to be a few pips above the blue candle serving as pullback. Okay, SL. What am I trying to target? My entry is going to be triggered here. I'm targeting 1 to 2 risk to reward ratio. Definitely this gave me more than that. I have almost 1 to 4, 1 to 5 here. Okay, you can see it's coming down aggressively. It's just moving down aggressively. Okay, so I have another this is a big move also, you can see. Then I have my channel. What's the date? This 15th of April, so I'm close to 18. You can see the channel, it got broken right here. I have to be fast. I believe you would have gotten a catch of it. Please, if you are getting value, subscribe to the channel. All right, so I have a pullback right here. You can see those blue candles that serve as my pullback. Here's my black horizontal line. I would have entered somewhere here. Okay, entered somewhere here. Stop loss here above your pullback. SL. Target words 1 to 2 risk to reward ratio. You can see, wonderful. All right, so basically that's how it goes up to this point. I had a big move here. I had a big move here in the downwards direction. We got our pattern right here. You can see it right here. Pattern got broken. You know, I'm not entering immediately. It breaks. I'm waiting for my pullback spotted. You know, I've spotted my pullback, so I'll place my sell stop just under the pullback. Okay, just under the pullback. Place my sell stop there, and stop loss where? Stop loss just above the pullback. What am I trying to target? 1 to 2 risk to reward ratio. Give me more than that. And you know, this altogether is also a big move. After my big move, what am I looking for? I'm looking for my channel to form. I have my channel moving up like this, and that's the last part. Okay, so it got broken right here. Do I have a pullback represented by a blue candle? Yes, I do. So where is the horizontal line? Where will I enter my trade? I would have entered somewhere around here. Okay, I would have entered somewhere around here. So price would have triggered here, triggered the trade somewhere here. Where will I put my stop loss? Stop loss here. Target 1 to 2 risk to reward ratio. Let's see if we have that. Okay, let me see. I had price moving all the way down like this, and I would have gotten my 1 to 2 risk to reward ratio. This is a wonderful strategy. This is a strategy you should pay for, you know, but I decided to give it to you for free. All right, if you're a new viewer, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.